that. Deepan, I'll come to you in a bit, but for now we have a management joining us. Escorts has come out with very good sales data for December. Bharat Madan Group's CFO at Escorts is joining us now. The sales were up 88% from last year's number. Mr. Madan, good morning. There were a lot of people who thought that perhaps the momentum could slacken a bit, but that didn't show in December numbers. What's the outlook now? What kind of visibility do you have?
Hi, good morning, and first of all, wish you all a happy New Year.
Thank you.
So I think the outlook looks promising right now. So we're seeing the Rabi sowing data, which actually has seen good growth, and we expect the Rabi harvest should also be good. So I think climate is also playing around, and I think the harvest period should actually be good. But yes, since the earlier pent-up demand which you've seen because the lockdown, so actually that impact may not be there, but definitely we expect at least in the next 6 months that double-digit growth should continue in the industry.
Okay, Bharat, good morning, and yes, Happy New Year to you. It's already started with a bang. I mean, 88-90% growth in sales is like mind-boggling. You had guided for mid-teens growth and you're already at 12.5. Do you, if you take the year to date, will you want to revise your guidance even more?
Well, I think you're right. So we said actually it will be in the upwards of, I think, mid-teens. So we expect the industry probably can show growth of somewhere around 15-20%. Actually, industry has already grown 18% so far in the first 9 months. So maybe in the full year basis, we can expect it will be anywhere between 15-20% growth for the industry, which will happen.
Okay, so 15 to 20% growth for the full year for the industry is what you're looking at. In your press release, Mr. Madan, you said that post the lockdown, this is the first month you could supply as per the demand of customers. So is it safe to assume that all the supply side constraints have been resolved? And if yes, have you been able to recover any market share?
Yeah, that's right. That's what is reflected in the numbers. So the industry, if you look at for December, has grown about 45%. So growth is coming at 90% in the domestic market. So it's almost double of what the industry has done. So we've been able to do some catch up on the market share in this month. And now since, like you mentioned, so our supply issues are all actually sorted out. So this also reflected in the numbers that there was some demand which is pending to be executed from our end because of the supply issues in the last 2-3 months. We are running at full capacity, so now since the supply constraints are over and we got supplies available, so this is what actually we got supplied to the customer. And second big reason for also December growth is the inflationary pressure which is coming in. Most of the OEMs have taken price increases from 1st of January. So that's why I think there was some pre-buying also which happened in December because the increase has been coming very high on the steel prices. So that could be another factor which led to this such a strong industry growth in December numbers.
That was going to be my next question to you, Bharat. Will there be a margin squeeze? Will you be able to pass on any margin guidance?
So actually we had taken a price increase in this quarter, so to neutralize the impact whatever we could for this quarter, but definitely the prices are moving now every second week, so that's another, I think, cause of worry for the OEMs. So whether we'll be able to pass it on or not 100%, I think will depend a lot on how the competition reacts and how the industry behaves and how the steel prices stabilizes. So right now we're seeing a big pressure coming in for next quarter, so it can actually have some impact on the margin to the downward trend if we're not able to fully pass it on.
Okay. Just a word on exports. You are able to pass on prices there, and do you see that being another engine of growth and demand?
Yeah, so exports obviously has shown promising numbers. So again, since we had issue on the supply side, so we had good order book which is building up. Even today we got order book of more than 1,000 tractors. So we're doing roughly 450 to 500 tractors a month now. So we assume I think that trend rate will continue for at least for next 3 months too. So overall, yes, this could be one another growth portfolio we're looking at, especially in the next, maybe if you look at midterm, next 3 to 5 years, this could be one good growth engine for us.
Okay. Thank you very much, Bharat, for joining us. And we do hope to have such optimistic interviews with you through the year. Thank you so much.
Thank you.
Okay, so that's one hell of a positive statement. Yes, there will be pressure on margins, but we've been hearing that from all consumer goods makers, especially from the auto segment. Let's quickly run you through the past financials before we go to Devin. First, the revenue trajectory. This is the last 3 years. And the first half, but don't be fooled by the first half because it looks like the second half is going to more than compensate for, they're speaking about a 12.5% year-on-year growth. So obviously the third quarter is going to be very different. Let's get the EBITDA as well. All right, there's the EBITDA. The first half, again, should not beguile you because second half is going to be very strong. Net profit finally and EPS.
Okay, so those are some numbers for Escorts. It's of course been a strong stock. It went through some correction last month, but has bounced back. And let's see, Deepan, you reckon it could go back to its all-time high? I think it was somewhere around 1400 thereabout.
Absolutely, I think, and this has been one winning company right throughout 2020. And I think all the strategies have clearly played out, which is all about execution. They had a good geographical expansion strategy that played out well. On the product side also, they've improved the content over there. And most importantly, I think in these tough times, the supply chain management was far better than the competition, which is why they have gained market share. And it's a much leaner and fitter company. And that's got reflected in the earnings and the re-rating of the PE multiple. And I think, although I would say a large portion of that has been priced in, the stock still has some way to move up also. And if it starts to get into a bit of more consistency in terms of performance, even at a higher level, then certainly I think investors may continue to favor the stock. But a large part of the gains in Escorts have got captured. So one needs to keep that in mind, that the kind of past returns which have come in 2019 and 2020 certainly may not get repeated, but at least it could be a fair market performer.
Okay, well, also remember that there will be price hikes Jan onwards, and there was pre-buying in December because of that. That could be another reason why the numbers have been very good. But let's take a quick break on that note. On the other side of the break, we have our entire technical team joining us to tell us how to approach trade today.